Morning, everybody. It's the 25th of May. We are Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
All good?
Yeah, all good. All good.
Excellent news. Okay, let's get stuck in. So, move to all-time highs in a few indices this morning, which we'll come on to shortly. In terms of what's moving markets today, a little bit going on the political front. We've got this backlash from the Ryanair situation where the flight was pulled down over Belarus. Did you see that, Steve?
Yeah, a bit naughty, wasn't it?
Little bit.
Very naughty indeed.
On the commodity front, we had crude holding its biggest two-day gain since March as investors monitor a recovery in demand that may enable the market to accommodate fresh flows from Iran. So that's pushing things higher today and obviously having a bullish impact not only on the price of oil itself, but obviously having a bit of a knock-on impact on some of the indices as well, which situate some of the heavyweight oil stocks. Again, come on to that shortly. It was a holiday yesterday in large parts of Europe, so that would explain why things were a little bit on the quiet side, which is to sort of grind higher in most of them without any real movement either way. So I guess, Steve, we can get stuck straight into the charts because there isn't much news beyond that, unless there's anything you've seen.
No, I'm quite happy to get stuck into the charts.
Let's do it then. Steve, do you want to take over and have a look at some of these indices? Because I think that's sort of,
Yeah,
and maybe some of the commodities where it's at today.
yeah, sure. As we've sort of talked about on the indices, we've had some bearish candles, like top E candles over the last, well, we can say 4 or 5 weeks really. But yet we still managed to post a new all-time high in the DAX. So I don't know what is the catalyst for turning this round, but I feel we are going to get a turn. But you've got to just sort of like wait for the reversal. Don't get sucked into just selling it because it's an all-time high, like I did on the gun to head challenge yesterday. You can see my 4-hour chart.
Sold it in front of the all-time high, didn't you?
Yeah, I sold it in front of it. It's obviously it's sitting quite nicely above it. It's had a reaction higher this morning up to the 15,600 level and reacted lower from there. So this has got a potential to be a bearish outside candle on the previous charts, and it would have engulfed the previous 12 hours of price action. So could it be by 10 o'clock we could have that reversal candle that I'm so desperately looking for? Not sure. Shooting star candle forming on the 4-hour chart on the FTSE as well, and again toppy candles just before that. So MACD looking like it's moving lower. US markets, shooting star on the Dow Jones on the 4-hour chart. That's a negative, and not so on the NASDAQ. So the tech stocks seem to be sort of like holding us up at the moment. Let's get rid of that big red candle, putting everyone off. S&P's a little bit off its all-time highs, up at 42.45, 42.10 trading. But again, we've seen a little bit of a slowdown, getting a bit of bearish divergence, as we can see with the momentum slowing down here while prices are moving higher. So that's what we see on the indices. Also, just have a little look at China. Hello, China. What's going on here? Hello, me old China. Well, we did have this inverse head and shoulders formation we picked out, and it's played out really, really, really nicely. And the measured move target of this is up at 18,445. So it's a bit of a complex head and shoulders pattern that looks a bit like a double shoulder on the left here. The head, the right shoulder is down here, and this would have been the neckline, a downward sloping neckline. We broke up through it, come back and retested, and then we've projected higher just in the last 8 hours. So once again, a head and shoulders formation, albeit an inverse one, has borne fruit. The Aussie 200 looks positive, looks promising, mainly a commodity-based one, obviously with oil picking up as well. Gold remaining around the highs, so that's doing quite well out of there. The all-time high is sitting at 71.72. Let me double check that's an all-time high. No, the all-time high is way back here, 17th of Feb. The all-time high then is 7,202. And more recently, we've got up to 7,173. So we're still about 100 points shy of the all-time high in this type of expanding wedge. Maybe potentially a diamond top, but that's yet to play out. That's obviously considering that we won't go any further. So we'll be talking about this bearish flag on the China 50, and lo and behold, we've broken back above this channel, this sideways channel, the congestion area over the last few weeks. We formed a shooting star candle last week, and looks like we have completely wiped that out. So this again looks to be a decent, well, that's the inverse head and shoulders that we've just highlighted. So Japanese, the Nikkei 225, that's formed a bit of a recovery. We had this almost bullish hammer, although it's a bearish engulfing on the previous week, or a bearish outside week in the previous week. Then a bullish hammer formed last week, and positive price action. So we seem to the Asian Pacific area picking up quite nicely on the indice front, looking positive there. So we may have to forget for a minute this this sell-off Steve always wants. Popping over to commodities, where this is really sort of like playing out nicely. The gold is remaining strong. On the weekly chart, it's testing this upward channel. This is only a potential downward trending resistance line. It's really the horizontal resistance that comes in at 1875 that we're sitting above and looking quite nice. 1960 for me is the real level to watch after we take out the 1890 recent high and the 1900 psychological level. There is other small resistances that we can pick up on, especially if we go to a Fibonacci chart. We've got the 61.8 coming in at 1923, and 78.6 will be at 1990. So plenty of resistance above, but 1890 is the level that needs to be cleared before we see this move higher. There is potential for that, and it seems to be building. We can see that the dollar index remains in this bearish channel, so that's a negative for dollar, obviously a positive for the dollar-based commodities like gold. Crude oil retesting the really strong resistance level. This is going back to early January, 8th of January. We've got this level at 65.71. We're above it, and we're trying to really retarget this high here, 67.80. So trading now at 65.74, and again looking to really sort of push higher. Nothing really seems to be sort of slowing these commodities down at the moment, so pretty good. Cryptocurrencies, had a little bit of a look at Bitcoin this morning. I'm obviously negative on Bitcoin at the moment. Really sort of like the levels above to watch. We've got the recent price action seems to be capped. I'll look at the hourly chart of 40,000. This is only a short-term resistance. Above 40,000, we have a number of resistances between 42,140 and 43,178. Above there, I think it's a bit of a clear ride to just under 46,000, and above that, we can breathe again and start to sort of like count our virtual currency, which just floats about in the air. However, this would be for me a potential double bottom formation. I know it's only an hourly chart, but a break above 43,000, and that could open up a serious upward move If we draw there's the estimated target around about 54,000. That would be if we form this double bottom formation. It needs a break of the 43,000 level in my eyes, and then it may be not straightforward. It may be a little bit of a bumpy road, but that would look to sort of like regain ground. One of the main concerns I have with cryptocurrencies is, as you can see, this volume is still moving lower despite the rally. So we've got bearish divergence. So I still think the real move is, despite the risk of the 43,000 level, I still think the next real leg lower is still a distinct possibility. 20,000 is the real level to target from a support point of view. But even then, I think there'll be panic on the streets if we do start to sniff that. That's it.
Yes, thank you, Steve. Okay, so on the FX side, not as much going on as there is elsewhere, but this is the dollar index on the daily chart, still trapped within this bearish channel. No sign of the dollar index turning anytime soon. As you can see this morning, we are breaking below this support level that was posted back on the 25th of February. We haven't closed below it at the moment, and we although have made a couple of attempts at overcoming it in recent weeks and days, it hasn't closed below yet. So we need to see how that performs throughout the rest of the session. If the bulls decide to defend it, then maybe there is a little bit of a potential for a bottom taking shape in dollar index. It's all very speculative because clearly the overall trend is very bearish, as you can see here from the daily chart. So below this level, then you're looking at the next lows down at 89.21. That was the low that we posted down here on the 6th of January. And if we take that out, then obviously we're looking for a continuation lower. On the euro dollar side of things, that's looking pretty strong this morning. Obviously the flip side of what we've just looked at on the dollar index, trading within this bullish channel, breaking out above these resistance levels today as it stands at 122.45. In terms of the other resistance levels to look at, we've got this one here, which is being overcome at 22.46, and then we're looking for these highs again on the 6th of January up at 23.50. So all looking pretty strong on the euro dollar front. If we look at cable, that's facing a bit of resistance in the very short term at 42.41, which is these previous highs that we posted back in February on the 24th. Little bit of a warning sign with that candle there, I think, a bit of a rejection, but we're bullish again today or over the last couple of days, so looking for another retest of that level at 42.41. Euro yen, no signs of that slowing down at all. Yen continues to be really weak. That's probably one of the strongest trends around at the moment on the FX side of things. If we look at that on an intraday chart, it's quite interesting because it's just broken out of a mini consolidation. A really strong sort of technical push to the upside on that one, taking out these resistance levels at 133 along the way, and at the very least expecting a retest of this high and probably a continuation to new highs. Elsewhere on the currency side of things, what else was taking my interest? Maybe dollar yen, just on the fact that, as I just mentioned, yen is so weak. If the dollar index is going to attract any buyers at this level that we've seen, then you'd expect that it needs to happen pretty soon, and therefore, given how weak the yen is, it may be worthwhile taking a look at dollar yen. We've seen a little bit of consolidation in recent days, but there is still a sequence of higher lows. So maybe we'll see some action return here. It has arguably invalidated this short-term uptrend line, but it looks okay, I think. Just going by the hourly chart, it seems to have found some support here at 108.57, posted a nice looking reversal candle over the last hour. So maybe giving a few clues away as to what I might be looking at on my guns to head trade this morning. So yeah, I think that's pretty much it on the currency side of things. Not much else of interest, certainly for me at the moment. So I guess let's have a look at the gun to the head trades from yesterday. It was pretty uneventful. Steve, you were stopped on DAX, unfortunately. It was a holiday yesterday, so typically these markets just tend to grind up when it's a holiday because there's no real participation in order to send them one way or the other. And I had a trade on sterling yen, which was 4 ticks offside at 9 o'clock with a 0.13R loss. So, time for us to get back on it again today. Steve, if I was to point a gun at your head right now and ask you to give me a winning trade, what would you give me?
I'd give you a comment like, can I wait a little while?
Yeah, you can. I'm going to then, with that gun to my head, since you've just thrown it over to me.
Well, I'm actually
gonna
thinking now you're not going to shoot me because you've let me wait. So I don't know. I might
I'm coming
stop
back for
you
you.
or something.
Right, I'm going to buy dollar yen for the reasons that I just mentioned. Highly speculative, obviously, as these all are, because they're intraday trades, and we are, under duress to give you our opinion on where we think we could make some money in the very short term. So this is the trade I set up for me. It's dollar yen, buying at 108.73. Targeting a move to 109.27, stop loss below the lows of the session at 108.53. Bit of bullish divergence down here on the RSI, maybe a bit of support here on a trend basis, but that's what I'm going for, and I think there is a bit of potential on that, given how weak the the Japanese yen is. Don't get me wrong, dollar index is obviously very weak as well, but I think maybe dollar index might be a little bit stronger than dollar yen. So lesser of two evils. Steve, did that give you enough time?
Well, yeah, I suppose it has.
You've got a gun to your head, don't forget. So if you don't come up with something soon, you're going to be dead.
I'm sure there's blanks in there. So let's. Well, I'm sort of like thinking. Obviously, I'm bullish of gold, but just from a gun to head perspective, I don't know if we're going to go just yet. We've got this downward trending resistance level. It looks like we're rejected on the hourly chart. So very short-term trade, and obviously the stop can be really tight. Can be at 1890, and basically just, well, that looks like I'll leave it there, shall I? If we bring it here, can we bring the stop a bit lower? Yeah, let's get short here. 1882.27. Stop at 1887.27. And yeah, let's have a 2-to-1 risk reward, 1872.27. So that's where I'm targeting, which is just in front of the real support, 1870. So selling gold here, stopping at 1887.27 and targeting 1872.27. 2-to-1 risk reward.
Lovely. Best of luck. Okay, so news-wise today, we've got German IFO index, which is due out at 10 a.m. today. The index is expected to rise to 98 from 96.8 previously. Keep an eye on anything euro-related around 10 a.m. At 3 p.m. today, we have US consumer confidence to fall to 120, but we also have new home sales due out at the same time. And sales are expected to fall 10% month on month on that one. So not expecting any great data from the US today. But as we have seen in recent weeks and months, bad news is good news because it means that the Fed will be more accommodative for a longer period of time. So that's pulling everybody up and pushing markets higher. So we'll have to wait and see what the reaction is to that later on today. Anything else to add, Steve?
Yes, one thing I saw interesting yesterday. I don't know if anyone else will find it interesting, but I just sort of like picking up on the reasons that the media is sort of like out. I was just looking at this. I'll talk you through it. So what Americans die from, what they search for on Google, and what the media reports on, and it just made it interesting to me. So causes of death in US 2016 is basically cancer and heart disease. The Google searches from that year mainly about cancer, so that makes quite a lot of sense. There's a lot of people dying of cancer, but the media coverage from the New York Times, 35% coverage on terrorism, and similar from the Guardian, 33%. Homicide in the US is so minimal, I can't even read it, 0.9%. Searches 3.2%, but the media reporting on 23% of the media articles are about homicide. So it just sort of like, I don't know, just reiterates or sort of points out the fact of sometimes the media isn't really reporting what it should. And sort of,
those other stories aren't interesting though, are they?
well, they might. I mean, heart disease should really be a lot more interesting to people.
But in order to do heart disease, you have to start talking about healthy lifestyles and doing exercise, and people don't want to do that. If they don't want to do that, they don't want to do it, do they? So
no, I suppose not.
People are going to buy headlines that are about murders or terrorism or that's just what sells, isn't it?
I think if we jump forward to 2020, we'll have a big lump here, maybe taking over heart disease and cancer of COVID.
Oh, well, I don't think it will take over them two.
No, sorry, not this one. No, but
it will probably be in line with the homicide, won't it? In terms of
yeah, oh yeah, definitely. So COVID deaths will be a lot smaller than this, but it will be, the Google searches will be huge, and obviously the news will be huge. Not that I'm sort of trying to play things down. I'm just saying it does feel like this in this real interconnected social media news driven world. Sometimes we miss the point.
Cryptocurrency will be up on those searches, won't it? And how do I make money on stocks and stuff like that?
Yes, they probably will. Although again, I think the media coverage won't be as big as probably the searches, because maybe the media's paid for by the governments in some respects. Oh,
maybe.
Has he really said that live on air? There was one other thing, interesting one, and I've got this from top-down charts, and it's from the Refinitiv data stream. Just sort of like quite interesting how it's all about cyclicals versus defensives, and
so that chart going up means own cyclicals, and it goes down own defensives, right?
Yeah, basically. And we're at the top of the channel. Normally at the top of the channel, when we react from there, we then will get a sell-off in the indices. It's happened before. Top of the channel, sell-off. Top of the channel, sell-off. So yeah, there's the cycle at the moment.
I mean, my one's a bit broader, but I think I've shown you charts on this before, which was the bond equity versus bond ratio.
Okay.
So this chart at the bottom here is when this is going up, you want to be owning stocks over bonds.
Yeah.
When the chart's going down, you want to be owning bonds over stocks. It's quite simple, shift from one asset to the other, one being riskier than the other. So this is up at a pretty key resistance level, highest it's been since 2018. I've seen a number of levels that it sort of previously approached before dying. This is the equity markets at the top. So as you can see here, it's trending higher, very much in the same way that chart was that you were just showing, but some sort of signs of stalling here or reversing, and certainly a bit of a wedge forming here, which if it breaks to the downside, there's a whole lot of space down here to be targeting. So yeah, quite interesting, but it's been fueled by really loose monetary policy. So is that going to just keep fueling it on the upside? But it looks a bit overcooked in my book, and I don't know if I'd be going too crazy on buying riskier assets like stocks.
Yeah, what is that? Is that a weekly chart?
Yeah.
Yeah. I mean, I think it's just a matter of timing, isn't it? We all know that something's got to give.
So this is all the equity markets combined. So this is Euro Stoxx 600, FTSE 100, and the S&P 500 all combined together in one chart. And this is the ratio of the 10-year government bonds for each of those markets. So the Euro 10-year government, the UK 10-year government, and the US 10-year government, and then divided them by each other. So as I say, this is the ratio. So when it's going down, it's best you'll get a better return from owning bonds, and when it's going up, you get a better return from owning stocks.
Right. Okay. It just feels like sort of like, yeah. I mean, bonds still hasn't shaken off that sort of like negative looking aspect to it. It needs a sort of like, we need a big sell-off in the bond market, which will mean higher yields, which means interest rates going up, which means everyone panic. Last one out, shut the door, or switch the light off.
Well, I don't know. With I mean, obviously yields aren't great, but the price of the bonds have been whacked recently, which obviously means that no one's buying them. But at some point, I think when you see that sell-off, it won't be the yields that be going up; it'll be the price of the bonds going up because there'll be an increased demand for them. So
yeah, if you look
a difficult one.
DAX, German 10-year bond, the Bund.
Have you got the chart?
Yeah, sorry, it was just on your chart then.
Oh,
just an interesting one. We just looked at this morning. Look at this reaction. Got a really nice bullish hammer there. Hammer time. So let's see if we get confirmation. When we see a rally in the Bund today, this week. So plenty of time. Then are we going to see a bit more of an extended move higher? We should definitely get, if we finish off strong this week, I think we'll get some follow through. However, that for me, the 169 level, just below that, feels to me a bit pivotal now, especially when we sort of like consider also the reaction high back there. So are we in this real sort of
look at the US
area?
10-year on that chart that you've got.
Yeah, I mean,
sorry, I was looking at on the daily, I think. Been a massive move. You're on the UK one, the one below it.
Oh, sorry, mate. Oh, yeah, hello.
Waking up.
Yeah, waking up, smelling the coffee. Look at that. So that was the move, sort of like 12th of May. Yeah, I like it. Look, wow. That must have been that must be a
auction or something.
No, the front month moving.
Right.
So you'd have I mean that's a big old move, isn't it? So yeah, that's maybe the actual yield on the bond has changed for that next future contract. I would say that's what it is.
Yeah, but sorry, Steve. On that Bund chart, did you go back even further to 2016?
Yeah.
Oh, you did. Yeah. So yeah, it's massive. It's a massive level.
Yeah. That is it, isn't it?
Is it
I mean, I remember
well?
trading bunds on the floor. I mean, yeah. So this was probably the last time I was trading bunds. It was around about the 120 levels. Really, probably around about here. Yeah. So once I sort of moved out of the market, it just catapulted up.
That low in 2018 to the high.
Yeah.
For some extra eerie stuff, he's bang on just around a 50% fib level as well.
Right. Lovely. I mean, yeah, frightening, isn't it? Oh, Vicar. So, yeah, that's the level to watch. I think we break there. We definitely hit the 61.8, if not the 78.6.
Just for anyone watching, why that's important, it's obviously the government bond in Germany. And again, bonds are considered safe haven. If you start getting more people buying bonds, then it's an indication maybe that people are avoiding riskier assets and looking for safer havens. So, yeah, something to keep an eye on, I think.
Yeah, this head and shoulders formation.
All right. Well, maybe not then.
Well, I mean, it's just sort of what happens normally. You get the push through the neckline, get the reaction back, which will play out really nicely. That'll be that done. Get the reaction back to this level, 170, 180. Then we sell, sell, sell. Measured move target of this.
Negative.
Well, no, that's the crypto one. Did you see my
Oh
crypto
yeah,
one the other
yeah,
day?
yeah.
So measured move target there down to 160 again,
Ooh.
sort of like where the move started.
So that'd be an increase in yields. And
Yeah,
again,
that'll
there's another
be
question to be asked. Do you invest in risk-free assets for 2%, or do you still speculate in stocks?
yeah. Well, that's the thing, isn't it? The sort of higher interest rates do cause it's a bit of a double whammy, isn't it? Yeah, batten down the hatches. Last one out, switch off the light, even if it's powered by solar or whatever. Just switch it off.
Okay, right, Steve, we've gone on for long enough today, I think. Let's wrap it up. We'll be back tomorrow. Good luck if you're trading. Until then, trade safe.
Cheers, guys.
Bye, guys.